Nandita Agarwal-Pakar. She's the managing partner at Karma Capital Management. She's joining us right now on the phone line. Thanks very much for joining us, Nandita. A very good morning to you, and indeed a big positive doled out by the finance minister.
Good morning to you. Yes, it is. It's a very good morning, and we are very enthused by the measures announced by the finance minister. I think what is striking to me is the willingness by this government to listen and respond in a relatively timely manner, and really to strike at the core of the issues that have been plaguing corporate India, MSMEs, and the financial system. Obviously, the FPI surcharge was a big irritant that came out of the blue in July. And since then, as you mentioned, India has lost $3 billion of FPI flows. Let me also highlight that it's not $3 billion. It's actually $150 billion in market cap. And when people talk about this stimulus as being without any, impact on the fiscal deficit, the big impact will be if there is a positive, if there's a recovery in the market and a positive wealth effect. So from just $150 billion, there's been a huge negative wealth effect in the last 2 months. And in fact, that started in February of 2018. So if you look at February of 2018 to now, it's about $350 billion in negative wealth effect. And no amount of stimulus could have actually repaired that. So I think the measures that the finance minister has announced are extremely positive to revive sentiment, to revive liquidity, the interest rate transmission, and we are very, very enthused by these.
Right. So, Nandita, while obviously this is, going to provide a short-term fillip to sentiment across the board for Indian equities, but do you see flows coming back in a hurry, considering the way the global markets are shaping up, considering the way, all hands off the table with regards to the trade war truce? Would you say that it's still going to be a slightly more labored process?
So there's two things now. One is that India has been underperforming global emerging markets, even in the last couple of months. So that level of underperformance will correct itself. And secondly, in a global environment of very high uncertainty caused by a very volatile trade war, between the two superpowers and the slowdown in the developed economy, India's growth revival should stand out. Obviously, there is not a button you can push that you can automatically revive the economy tomorrow morning. But all of the doubts that have been creeping up in the minds of investors, in the minds of companies, in the minds of the SME sector, just the feeling of mistrust, the lack of cash, or at least a feeling of lack of cash because the government has not been paying its bills. All of those will work to a revival of the economy in the second half of the year. And so I don't know if there are many countries in the world today that can say that you will have, let's say in the next couple of months, an upswing. And I think that that is quite clear today, is that an upswing or a revival in the economy is in the offing from all of the correction that has happened, as well as the transmission of interest rates and so on. These will start playing up, and so we are extremely positive now.
Yeah, I think Nomura also in the note have said something that's similar, that earning expectations remain elevated and disappointments not rule out a scenario when the risks to global growth amidst rising tensions are there. India is probably relatively better. Nandita, good morning. Neeraj here. Just one final question on this. So part of the damage control move has been done, as we spoke to tax experts, they mentioned that all the other incomes earned by FPIs and AIFs, such as the gain on sale of unlisted securities, debt funds, preference shares, interest income, and the business income of an AIF, derivative income that is, the enhanced rates would continue to apply. Is that an irritant, or a large portion of the irritant has been taken out according to you?
So I think for the bulk, from the equity market standpoint, a lot of the irritants have been taken out. I would say this, that further measures are required, and we will be, again, engaging with the government to highlight those. And my sense is that, since this is the finance minister who is is listening and responsive, that something will be done. So I think that there is reason to be optimistic that this government is becoming very market savvy.
All right, Nandita, always a pleasure hearing your thoughts. Thank you so very much for joining us this morning.